Welcome back. Reported Apple job cuts and a bullish call on the stock, the focus of today's Tech Check. Our Deirdre Bosa's got that for us. Hey, Dee.
Carl, maybe the most interesting thing about Apple finally doing some small layoffs is that it just underlines how well managed and disciplined Apple has been relative to its big tech peers. Look at this chart. Apple has not had to cut as much because it didn't hire as much. Amazon and Meta, they doubled their workforces, while Microsoft and Google's each grew by more than 50%. For Apple, it was more steady, 20% bump for a more than 40% increase in revenue since 2020. Now, it's not that Apple is immune to a slowdown. Revenue this year is expected to contract, and it is making cuts around the edges, like trimming budgets and pausing hiring on some teams, also laying off some contractors. But if big tech has become a kind of safe haven for the markets, Apple is, of course, the poster child. At the end of 2022, it had cash and marketable securities of $165 billion, net cash of $54 billion. And when it reports later this month, it is expected to increase its dividend and expand its buyback program. And finally, guys, if this isn't a flex, I don't know what is. Tim Cook appearing on the cover of this month's GQ, released just yesterday. There it is, looking suave. And, while his counterparts at Meta, Alphabet, Amazon, they're facing tough questions in the media about overhiring, overspending. Cook here is called Silicon Valley's quiet visionary, and he gets to chat about his morning routine and weight training. Part of the more than 6,500 word profile, though, it was dedicated to that rumored AR/VR headset. Cook, he stopped short of confirming its existence, but he did talk about its potential and why people might want a mixed reality headset. He says it could empower people to achieve things they couldn't achieve before, accelerate their creativity, guys.
There's a curse of being on the Forbes cover. I don't know about GQ. That's not a typical one for CEOs, I don't think, especially talking about weightlifting. That's pretty good, Deirdre. So do you get the sense that this is, on a serious note, that there's more cuts coming? Because you said these companies they were serial hirers and they expanded so much. Right. Where are we in this cycle of layoffs?
I mean, you rarely hear Wall Street analysts call for more cuts at Apple. It's sort of, with this safe haven status has that image to protect. You could imagine that investors would get worried if you saw Apple cut its workforce by more. But there's also the simple numbers behind it. It just didn't hire as much as the other guys. We showed you that chart at the beginning that shows Apple increased its workforce by about 20%. I mean, compare that to Meta and Amazon that doubled their workforce. And yes, revenue went up as well. But I think that Tim Cook, and a lot of this GQ profile, to go back to it, is how he is slow and steady, how he's not trying to make a splash, that second mover advantage that he's become famous for. So you look at that, and you don't hear those calls because it didn't overspend and didn't overhire during the pandemic like its big tech peers. Alphabet, on the other hand, though, guys, I think a lot of folks are wondering if it doesn't need to cut more.
All right, Deirdre, thank
staplers.
you. No, it's an interesting comparison. Deirdre Bosa, thanks.